Nigerian equity market is up 10% already this year, and bond yields are looking attractive. Joining us in the studio to take a look at equity strategy and, of course, broader investment strategy in Nigeria for this year is Olaleye Adekeye, who's an equity market strategist from Renaissance Capital. Thanks a lot, Olaleye, for joining us on the show. Let's start with bonds. So far, we've seen yields for the 1 year to maturity at about 8% now, 20-year 13%. And just slightly less than 4 year at 11.4%. How do we play bonds for this year, in your view?
The expectations for this year largely is around, an uptick in yields this year. This is based on inflationary concerns for the economy, as well as fiscal spending, has some inflationary effects. Our outlook is for an uptick in yields. As such, right now, we would probably be recommending a wait and see. We do feel that bond yields will probably go higher.
And that's on the back of what? The AMCON?
Yeah, that also,
issuance?
yes. AMCON is one of them. We see inflation rates being upward sticky this year. So we see some monetary tightening that will still take place this year. So on the back of those two, we see bond yields potentially inching higher than where they are right now. So it probably wouldn't be a good time to go long especially on the longer term of bonds.
Stay on the shorter end of the curve.
Exactly.
All right. And then for equities, obviously we're already up 10% this year. And speaking to many analysts, some are of the view that we should do at least 18%. And what's your house view on your end?
We don't have a specific, specific return target. However, our view is that the market has more potential this year than 2010. And we all know that the market did almost 19% last year. And following up from that, our own expectation is that the market will definitely, has more return potential going forward. If we've already seen 10% this year, year to date, that is, we still see a much more positive, outlook for the market.
But some already implying that we may be a bit ahead of ourselves. Yeah. More so for companies like Nigerian breweries. Most analysts that we're speaking to are already saying that one should underweight on that stock. Where do you see the upside from where we are today?
There's a lot of upside that we see that could potentially support the market. One of them being the potential completion of banking sector reforms this year. We do see that political risk environment also will improve in terms of, we do see that after April elections, that the environment will be more stabilized. In addition to that,
so that would lift the banking sector as a whole.
We do feel that yes. I mean, the completion of banking sector reforms, as well as the political risk, also will support the equity market in general. Right. Pertaining to banking sector, what we see is the completion of AMCON purchase of non-performing loans in March, as well as the resolution of the troubled banks by June, will be catalysts for the sector.
So I should be aggressive on equities.
You probably want to be, yes. You want to choose what stocks you are going. I mean, we're not recommending every stock in the banking sector, but yes, we do see potential for upside in the banking sector in general.
But the most value is in the banks, in your view.
We like the banks.
Sector-wise now.
Yes, we like the banks. We like the consumer sector. However, we're also selective in that sector because of obviously inflation and food inflation particularly. But that said, we do feel that credit growth from the banks this year will help the consumer sector. We also like, we're selective in the oil and gas sector. We like stocks that are diversified along the value chain, not just in the downstream. We like some agricultural stocks also. Being that they've contributed a great amount of GDP growth in the past, and on the back of rising commodity prices internationally. That said, though, liquidity in the agricultural sector in Nigeria is quite limited.
What about the currency? Because obviously for foreign investors, that's something that they will be paying very close attention to. And what's your take on the dynamic of higher oil price, obviously from what we've seen so far, and where the reserves are? What's your take on how the currency risk for Nigeria in general for this year?
Yes, our economists, their view is that we will probably trade around the same range, which is around 150 naira plus or minus, at best maybe 3 or 4%. On the back of strong oil prices, we've seen relative calm in Niger Delta. That's supportive of oil prices also. Also, in terms of inflation, we've seen inflation come down, at least in December. But the outlook, the outlook is still inflationary. That said, inflation is less than what it was, most of 2010. So in terms of that, the real interest rates are at least less negative than they were in 2010, and those are positives for, our outlook for the currency.
So you see a stable currency?
We see a stable currency, plus or minus around the same range.
So just to summarize, overweight equities,
yes.
And how do we play fixed income?
Fixed income, we definitely recommend you stay closer to the shorter end. You want to be able to be mobile in terms of moving in and out if there's a hike in interest rates.
Right. Much appreciated. Thank you so much.
Thank you for having me.
For your thoughts there. Olaleye Adekeye, strategist with RenCap, giving us his thoughts on investing in Nigeria for 2011.